Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and the correction that it's currently in. Where are we now? What is our damage report? If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. So let's take a look at the damage report. Now, the first thing we can do is we'll just look at some of the moving averages that we've held as support during the bull market and show that we've broken them so far, and we'll show where we currently are. So the first one we're looking at is the 20-day simple moving average. So the 20-day SMA, you can see that during the bull market, we had some key bounces off of this level. When we bounce off of it in a bull market, it can lead to 15 to 20% gains in the short term, around that level. When we don't hold it, though, the nice thing about not holding it is that it doesn't necessarily mean we capitulate. And we saw that happen. We had a wick here, we had wicks here, or some candles here. We also came below the 20-day over here, but ultimately just continued the bull run. And again, here and here. And then now we have dropped pretty far below, okay? Now, let's take some measured moves really quick to see how far below we've dropped. Now, the furthest point we reached last time was around 20% below the 20-week SMA, or the 20-day SMA, I should say. Currently, we are about 14.7% below it. For us to get to 20% below it at the current level of it, it would correspond closer to a $47,000 Bitcoin, which we in fact hit. Okay, we in fact went to around that level, around 47,440. So we can see the damage report so far. Hey, the 20-day did not hold. We knew that this is obvious, common sense, right? The 20-day moving average is at almost $9,000, about $9,000 higher than the current price is. So clearly we're well below that. What about the 50-day? Okay, the 50-day is what we held back over here in January. And we also hit it in March as well. Okay, so the 50-day moving average is obviously it's slightly longer. We've come back down to it a couple times during the bull market, and before these two tests, the last time we were there was back in October. Okay, so October and then January, followed by March, finally went back down to it in April, but it didn't hold. It didn't hold. And one thing I think that's important to point out is that the correction we had in January was actually worse compared to what we've done so far. Okay, so in January we dropped around 31%. So far we've only dropped a modest 27%, which is a little bit closer to the 26% we dropped back in February. We also had another drop over here in mid-March that took us down about 17% or so. So we had 31%, we had 26 or 27, we had 17%, we had 27% so far. Why does this one feel different, though? The reason it feels different is because I think my interpretation of it is that people get used to whatever the new normal is. And when you're moving up this quickly, it's not like we got super comfy at 42K. We were only there for a brief period of time. So when it goes back down to 32, we were literally just there. Okay, we were literally just there a few days before. If you look at this wick that went down to $30,000, we were at that same level 6 days before. 6 days. So it didn't feel quite as bad because we hadn't really gotten accustomed to what the new normal was of a $42,000 Bitcoin. So when we came back down, it's like, all right, we were just here last week. That was a 31% correction that ultimately took us down to 29K, which by the time we hit that wick, the last time we had been at that level was only 18 days before. Now, if you look at the wick we just hit, the reason it feels different is because at this level, the last time we were there was about 48 days ago. Okay, so people are starting to get accustomed to what the new normal is. People really liked the idea of a $58,000 Bitcoin, and to see it about $10,000 lower at yesterday, to see it that way, it really affects people in a different way that I think had it played out similar to this move or some of the other ones that went straight up and then straight back down and then straight up and then back down. The issue here is that we'd been consolidating for so long at these levels that to then break through it felt like a little bit more of a gut punch to some people because they had gotten accustomed to the new normal. And because it had been up at this level for a long time, there probably were a lot more people that had bought Bitcoin at these levels. Okay, there probably weren't that many people, relatively speaking, that bought Bitcoin right there than had been buying it all the way up. Okay, the issue now is we had a lot of people buying it above 50K, above 60K, and now they're all looking at a short-term loss at the very least. Now, what are some other moving averages? The 100 days where we currently are. Okay, so we're currently sitting at the 100-day moving average. The 100-day moving average for Bitcoin is 49,492. We're currently at 49,834. We have had a wick below. We're currently sitting at the 100-day MA. When's the last time we tested it? Well, the last time we tested the 100-day was actually around the same time that we tested our bull market support band. And remember, the 100-day moving average is an average over 100 days. The 20-week SMA is an average over 140 days. So there are going to be some similarities there. But it's interesting to note that we are at the 100-day moving average, and we will see if we bounce here, or if it's to the 20-week we go. Okay, the 20-week SMA now is at around $44,000. Okay, so we're still a little bit of ways from it. We would need to drop, to get to the 20-week SMA, we would need to drop about another 15% or so. So not a huge drop. We've certainly seen drops like that before with Bitcoin, but that's where we would ultimately need to go to the 20-week SMA, or our historical bull market support band. Okay, so again, right now we're sitting just shy of 50K. I wouldn't be surprised to see some buying pressure, honestly, around these levels. I know a lot of people, had been saying they wish they could buy Bitcoin for less than 50K. You can see that the 50K level hasn't quite yet gone down without a fight. There certainly are buyers at this level. We just want to remain somewhat flexible on where we may see things going in the not so distant future. Remember, at the end of the day, no one's going to ever be able to accurately tell you every single move, but let's plan for whatever happens, okay? And the way I plan for that is, hey, I have my positions. If we bounce up, then great. If we go to the 20-week, I got tons of stable coins. I'm ready to deploy. So this is sort of what I wanted to talk about in this video. We're looking at some of these moving averages that we haven't tested in quite a long time. The 100-day having been all the way back in October. Now, I want to switch gears and go look at, again, our bull market support band and look at the time between tests and see where we are. Okay, so currently, from the last time we more or less tested it, we're out 196 days. Okay, if you went back to 2013 and looked at the time between tests, here was a test, and then we tested it again 231 days later, but we did have some wicks at 147 days or so. But really, you can find a wick here that hit it as well, the 21-week EMA, at 203 days. So again, there are some similarities. If this were to continue to play out like 2013, then it would imply going back to the 20-week moving average next week. Okay, so it would imply going back to the 20-week moving average next week, and by next week I mean at least 2 days from now once we get the weekly close, and it will have been exactly around the same time if you ignore these crazy wicks right after we had this short-term blow-off top. Okay, it took about 203 days, and it took a little bit longer to get a weekly close below it. That was about 231 days. Again, we're currently at 196 days now. The longest period of time, last cycle we went from testing the 20-week was from here to this wick, which was 126 days. So the one thing we know by looking at, say, tests of the 20-week is based on the current cycle, things are a bit different than they were last cycle, and that's why I've been comparing it more so to 2013 than 2017, because so far this has not been a systematic test of the 20-week moving average, and we had one test of it here. You could argue that we sort of had a test of the 21-week EMA right here as we sort of slowly converged to it, but it wasn't as definitive as this test. So I would say, hey guys, we prepared for this forever. We know corrections are going to come. It's just par for the course. Nothing too crazy. This is our expectation that corrections will happen, and that ultimately Bitcoin will likely stand the test of time, continue to trend up over the long haul, I would not sweat corrections. I see them more as opportunities. If you're new to the market, obviously this can be somewhat scary, and I can understand that. You know, even though a lot of Bitcoin investors are battle hardened and at this point aren't going to be phased by these types of drops, we've all been there. Okay, there was always that first drop for us in Bitcoin where it kind of it wakes you up, and you're like, oh, it's not just going to go up forever, and there will be corrections. So remember, everyone goes through it at some point, and the people that stick around for the long haul, despite the dips, those are the true winners. The people that leave and capitulate, and then only buy back in during the height of the next crazy market phase. These are the people that don't tend to win as much. I'm not saying they can't win, because in a bull market we know that a lot of people can make money, but as I've always said, in a bear market, a bear markets can make you rich. Okay, bull markets can make you money. Bear markets can make you rich. It just gives you a huge leg up over the long haul. So I would say maybe keep an eye on that 100-day moving average, which we're currently testing, and if there's always a chance we bounce here in the short term. If not, if we don't bounce at the 100-day, I'm looking at the 20-week. Okay, I'm looking at the 20-week. We haven't tested it in forever, and seemingly forever. It feels like forever. We haven't tested it in a very long time, and it seems like they're sort of calling out to each other at this point. I mean, it seems like a test of it would actually be somewhat nice, especially to consolidate at the very least. Of course, we could go below it, but consolidate at the very least for a while, and sort of continue back up. So if you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, click the bell icon to turn on your notifications. Remember to check out intothecryptoverse.com for access to the premium content, weekly reports and videos, the risk dashboard, the Into the Cryptoverse app, premium only live streams, a whole lot more, the Telegram alerts channel. Make sure you guys check that out, intothecryptoverse.com. If you pay with crypto, you can get a discount. Thank you guys for tuning in. Make sure you subscribe to the channel, give the video a thumbs up. I will see you next time. Bye.